Welcome, fellow Bitcoin enthusiasts. Are you ready to dive deep into the fascinating world of Bitcoin halving and its profound impact on your portfolio? Join us in our latest video, Understanding the Impact of Bitcoin Halving on Your Portfolio. Get ready for an enlightening journey filled with insights, analysis, and actionable strategies to navigate this pivotal event in the Bitcoin ecosystem. But before we embark on this educational journey, here's a quick disclaimer. While we'll provide valuable information and analysis, it's important to remember that this video is for educational purposes only and should not be construed as financial or investment advice. Now, let's unravel the mysteries of the Bitcoin halving and uncover how it can shape the future of your investment portfolio. Get ready to level up your Bitcoin knowledge and make informed decisions with confidence. Bitcoin's halving. What you need to know. Hey folks, remember when the Bitcoin halving was a niche event celebrated by die-hard crypto fans? Well, times have changed. Now even Wall Street bigwigs are getting in on the action and everyone's buzzing about what this halving means for Bitcoin. So, what exactly is this halving thing? It's a technical event that happens every 4 years where the supply of Bitcoin gets cut in half. Think of it like making digital gold even rarer. Historically, it's signaled the start of a new cycle and a big price surge. But this time round, things are a bit different. See, Bitcoin has already hit new highs before the halving, which is unusual. So predicting how this cycle will play out is a bit tricky. In the past, after previous halvings, the price of Bitcoin skyrocketed, but some experts think the days of massive gains might be behind us. Still, there's plenty of optimism in the air. With the approval of new Bitcoin ETFs earlier this year, this cycle might be shorter but more explosive. Some folks think we could hit a peak in late 2024 or early 2025. Whether you're diving deep into understanding Bitcoin or just looking to make a quick buck, the halving and its impact on the market is something you'll want to keep an eye on. So buckle up and get ready for the ride. Think of the Bitcoin halving as a thrilling roller coaster ride through the crypto market's up and downs. With each halving, the roller coaster climbs to dizzying heights before plunging into exhilarating dips. But unlike traditional roller coasters, where the thrills eventually wane, the Bitcoin roller coaster keeps surprising riders with unexpected twists and turns, leaving them breathless with excitement and anticipation for what lies ahead. Fear not, fellow Bitcoin enthusiasts. We're here to arm you with the insights and tactics to navigate the impact of the Bitcoin halving on your portfolio with confidence. If you're eager to dive into the intricacies of this pivotal event, hit that like button below and let's get started. Bitcoin's halving mechanics. Alright, let's delve deeper into the fascinating mechanics of the Bitcoin halving. Picture it as a grand ceremony in the world of cryptocurrencies where Bitcoin miners, the unsung heroes of the digital realm, play a central role. These miners are akin to diligent workers tirelessly operating their machinery to maintain the integrity and efficiency of the Bitcoin network. In return for their efforts, they are rewarded for two forms of treasure: transaction fees and mining rewards, represented by the creation of new Bitcoins. However, there's a twist to this tale. Every 210,000 blocks, roughly equivalent to 4 years, these rewards undergo a significant transformation. They are slashed in half. This momentous event, encoded into the very fabric of the Bitcoin blockchain, holds immense significance. But why does it matter, you may ask? The answers lie in its profound impact on Bitcoin's supply dynamics. With fewer new coins being minted, the rate at which Bitcoin enters circulation slows down, creating a sense of scarcity reminiscent of precious metals like gold. Just like gold's scarcity contributes to its enduring value, the scarcity of Bitcoin plays a pivotal role in shaping its value proposition. But the intrigue doesn't end there. Embedded within the Bitcoin code is a hard cap on the total number of Bitcoins that can ever exist, a fixed limit of 21 million coins. This deliberate constraint adds another layer of depth to the halving event, highlighting its instrumental role in sculpting Bitcoin's value and scarcity over time. Thus, far from being a random occurrence, the halving emerges as a meticulously crafted element of Bitcoin's design. It is essential for maintaining its integrity and driving its value proposition forward on its evolutionary journey through the digital landscape. Imagine Bitcoin's halving as a grand banquet where the chefs or miners work tirelessly to prepare delicious dishes or blocks of transactions for the guests, the Bitcoin users. As a reward for their culinary skills, the chefs receive both tips from satisfied diners, that's the transaction fees, and a share of the banquet's treasure chest, that's the mining rewards. However, every 4 years, the banquet hall undergoes a magical transformation, shrinking in size and elegance, causing the chef's rewards to be halved. This culinary reduction mirrors the halving of Bitcoin rewards, resulting in fewer gourmet delights being served to the guests, but increasing the rarity and value of each dish. But hey, before we delve deeper into the impact of the Bitcoin halving on your portfolio, let's pause for a moment to acknowledge your incredible curiosity and passion for learning. If you found this exploration into the world of Bitcoin halving enlightening and engaging, don't forget to hit that like button and perhaps even consider subscribing to our channel. Your support fuels our mission to provide you with valuable insights and content, ensuring we can continue this amazing journey together, understanding the halving's market impact. So, here's the deal with the halving. It's not like a switch that gets flicked on and suddenly everything changes. In fact, the day of the halving may come and go without much fuss in the market. Sure, there might be some ups and downs driven by speculators trying to play the event, but that's not the real game changer. According to Swan's Lubka, the critical thing to grasp is what happens in the months after the halving. Miners, the folks running those energy-guzzling machines to keep the Bitcoin network ticking, rely on selling the Bitcoin they mine to cover their costs. And when the halving hits, they're suddenly selling half as much. That's a big deal because miners are some of the most consistent sellers in the market. Unlike a hedge fund that might sell off its holdings once in a while, miners are offloading Bitcoin day in and day out. So when their selling pressure gets cut in half, it can have a tangible impact on the market. And here's the kicker. We're talking about millions of dollars worth of Bitcoin being taken out of circulation every day. That's something investors definitely need to wrap their heads around when thinking about the effects of halving on the market. Consider the Bitcoin halving as a captivating journey through a time-traveling maze where miners are intrepid explorers navigating the twists and turns of the blockchain labyrinth. With each step forward, they uncover hidden treasures or mining rewards that fuel their journey through time and space. However, every 4 years, the maze undergoes a mysterious shift, causing the miners' rewards to be halved. This temporal recalibration may alter the course of their journey. Still, it amplifies the significance and scarcity of each discovered treasure, turning Bitcoin into a timeless currency of the digital realm. Rethinking Bitcoin's post-halving performance. Alright, let's dive into the fascinating phenomenon of Bitcoin's post-halving hype. Historically, after each halving event, Bitcoin has experienced remarkable surges, propelling it to new heights and igniting excitement among enthusiasts. However, there's a notable trend. With each halving, the returns from the halving day to the peak of the cycle have gradually diminished. While the prospect of exponential gains remain thrilling, it's essential to acknowledge that astronomical returns aren't guaranteed. Yet, amidst this backdrop, a paradigm shift is underway. The halving itself remains significant, but now another crucial factor comes into play: demand. With the proliferation of Bitcoin exchange-traded funds, or ETFs, demand for Bitcoin has reached unprecedented levels. What's more, historical data indicates that after each halving, there's typically a surge in demand from influential market players, colloquially known as whales, which exerts upward pressure on prices. What sets this halving apart is the staggering level of demand, which was already evident even before the block reward reduction. As Julio Moreno from CryptoQuant aptly articulates, it's the trajectory of Bitcoin demand that emerges as the true catalyst for driving prices higher post-halving. So please fasten your seatbelt, because this time it's the combination of demand dynamics and the halving event that could potentially propel Bitcoin to unprecedented heights. Picture Bitcoin's post-halving performance as a grand chess match played out on the global stage of finance. Each halving event is like a pivotal move in the game, with Bitcoin making strategic moves to outmaneuver its opponents and secure victory. Historically, these moves have led to impressive gains, but as the game progresses, the returns diminish with each halving. However, just when it seems like checkmate is imminent, a new player enters the board. Demand. Like a masterful chess player unveiling a surprise gambit, the surge in demand from ETFs and market whales changed the game's dynamics entirely, opening up new possibilities and reshaping the outcome. So, get ready to witness the ultimate showdown between Bitcoin and its adversaries, where the stakes have never been higher and the potential rewards never greater. Before we conclude our exploration into the impact of the Bitcoin halving on your portfolio, we have one final request for our fantastic audience. If you found our discussion enlightening and engaging, please hit that like button and consider subscribing to our channel. Additionally, we'd love to hear from you in the comment section below. Share any remarkable insights or strategies you've discovered on your crypto journey, and let us know what topics you'd like us to cover in future videos. Your support fuels our mission to deliver valuable content, and we're excited to continue this incredible journey together.